February 28th, and just like that, 2 months out of the year 2021 are over. How'd they go for you? Hopefully, they went well. If you're interested in real estate investing, have you started to focus? Have you started doing the daily routines, the 10 to 20 minutes I talk about and teach? Are you getting ready to write your first offer on a good or great deal in your market? Let me know because it is Sunday. I will be reviewing my positive impact score of the week. And let's just say this has been a pretty spectacular week for students of how to get started one rental at a time. I have heard about a record number of students closing deals this last week. I will just say A, record number, and two, we far exceeded our goal of 500,000 points of positive impact. I will be doing a goals video here in another, I don't know, about an hour or so. And I got to tell you, everything we've been doing here on this channel, the book, is really about helping people take that next financial step in a positive and good way. And I get the highest of highs seeing those direct messages, right? If you go to Instagram, one rental at a time, I've been communicated there. Some people have my book and my email is in my book. People have emailed me. Some of you have my phone number. You've been texting me. Love the pictures. Love the celebrations. Thank you, thank you, thank you. And again, if you are one of my students and you close a deal, make sure, let me know about it so you can be counted next week. So, no, as for folks, I did not do a Q&A session yesterday. I just didn't have it in me this week, given what happened on Wednesday. There was no live yesterday. I apologize. Just didn't have it in me. Needed some time. So we'll see about doing one next week. As for the daily financial news, a couple of things kind of jump out at me. First, the House passed their stimulus, their version. Now goes to the Senate. Looks like they're looking to sign this by March 14th. Again, I think there's a lot of good things in the stimulus. Most importantly, it gets us to the end of this, right? You now are extending unemployment out to the end of August. I certainly hope that is enough and far enough away that we can really get to we can really exit this dark time. It gooses it from 300 to 400, certainly replacing more and more income if you work in hospitality or hotels or restaurants. There's money for testing and all this other stuff. So I think this 1.9 trillion, while expensive, is not the one that bothers me. I'm a little nervous about the next one, right? The next $2 to $4 trillion bill that they're going to start to jam through the system. That one, I have a problem with that one. We'll see what it is when it gets here, but that's the one that I'm nervous about. I think this 1.9 gets us to the other side. Yes, it will be inflationary. Yes, there will be some people gaming the system, but we'll get past it. The consumers will start feeling better and all of those things. So, that's going to be good. The FDA approved, as expected, the J&J single-dose vaccine. Again, I think that is good news. I think we have 3 now approved. All of this leads up to what I believe will be a vaccine glut, probably by the end of March, early April. Vaccine glut means they are produced, but there's a distribution and a challenge sticking them in arms. But that will, again, be a problem that will work itself out. It will be a time when the consumer starts to shed their cocoon or whatever you want to call it and becomes that beautiful butterfly. So again, I am pretty excited by what I see in 2021. And again, I think it's, as a channel that follows the consumer and cost of capital, it's going to be a wild year because the consumer has been held back by looking at savings rates and dry powder and all of these things in an environment where real estate prices are rising, inventory is low. It is going to be it is going to be an interesting year for you and I to watch our markets, right? We need to baseline our understandings. We need to see what's going on because some markets will just continue taking off. They have the right population movement, jobs being created, tax friendly. Others can see a flattening, right? There's a return. For example, perhaps Tahoe, just as an example, right? It's a micro market, Lake Tahoe, California, maybe Nevada side. A lot of Bay Area folks rush to buy second homes there. No inventory, talking weeks of inventory. We get to the end of this, get to August, September. Do those people return? I don't know. I think there will be some markets that's like, oh, too far away, not enough going on. I'm going back to the city. So we need to see this. We need to watch our markets as investors. I know I will be. Other things I expect to start happening in the next 2 to 4 months. And these are things we should watch because, again, the consumer is our competitor. They are our renter. They are our buyer. They are the people that make real estate go. I think they are going to start spending on travel and entertainment. Talk about markets that have essentially been shut down. Entertainment, concerts, sporting events for them. Sitting in the stands. Comedy shows. Just all of these things that have essentially been shut down. I expect those to pick up. I expect actually the unemployment rate to go up. Now, hear me out. That's actually a good thing, not a bad thing. Right? The unemployment rate last I remember is 6.3. I think it will go up slightly, 6.4, 6.5, 6.6. It'll stay under 7. But it will be because U3, right, which is the most useless unemployment metric today, it will get a return. Right now, I think we've lost a couple of million moms from the workforce because they've had to stay home with their kids. I think as this opens up and schools get back in session and daycare starts to happen again, the moms will come back. And when that happens, the unemployment rate will tick up briefly as we work through this situation. So again, as people start looking for jobs, the unemployment rate should tick up slightly. Again, a good thing, not a bad thing, in my opinion. I think we're going to start adding jobs at a faster clip. If you remember in January, I think we added 49,000 jobs in the month of January. That's nothing. We are going to find out very quickly next Friday what we did in February. Did we add 150,000, 225,000? We are going to start adding some big ass numbers. And that will be, once again, a good thing. But again, we need to watch that. It's going to build over time. The new unemployment claims that we talk with Jonathan every Thursday about, it has been above 700,000 for nearly a year. If not a full year by now, actually. You should go look at it. It might be a full year. It will break under 500,000 in the next 2 to 4 months. We are going to get out of this with it. We just can't have consistently 700,000 new unemployment claims across the country. And it will break, in my opinion, over the next 2 to 4 months. I think the mortgage rate, the 30-year mortgage rate, FHA, owner-occupied, I think it's going to go up. It would not surprise me if at the end of 4 months, it's around 3.5%. Now, for some of you, that's a full point. But historically speaking, 3.5% is still a great rate. However, that rise is enough to cause some no answers. So as rates rise, there will be some folks who want a home that don't qualify. It's going to impact the affordability index. Then there's the 10-year note. Again, that one thing I talk about, January 1st is the thing I'm going to watch. I'm going to guess it's above 1 3/4, 1.75. I think right now it's resting about 1.4. It will be very interesting to see where it's at on Friday to see if we have more signs of growth in the economy that the Fed is behind on. We shall see. I think it goes above 1.75, which is why I think the 30-year mortgage is up. So real estate investors, if you watch this channel, you're likely a real estate investor or likely interested in real estate investing. These are things that I see coming. Love to get your feedback. And as always, tell me if I'm wrong. I think demand is going to be hurt. Something I have learned is as the affordability index in my market falls, means less people can get yes answers, which means less people can buy. I believe the big trigger this year is going to be supply. Now, I don't see rampant supply and I don't see foreclosures and all these other things coming like some people talk about. I think if that happens, it will be in select markets in next year, just giving foreclosure timelines. But I think in my market of Fresno, California, which I do not expect to have a foreclosure crisis at all, I think we will see more supply. I mean, for goodness sakes, we have to, right? We no longer talk about days on or supply of available homes in months. We're talking weeks now. So we have to watch this. So I think supply is going to go up because, again, the people that have really retreated, they stayed home, they painted the bedrooms versus going for a new home, are going to go, okay, time to go. I got a lot of equity. I want to live in a better part of town. I want a newer house. I want a bigger house, whatever, which is going to unlock inventory for first time buyers. So I think inventory is going to go up. And we as investors need to pay attention because some of that inventory is going to be clean and smell nice, which will sell fast to owner occupied. But there will be plenty of properties that need help, need love. And we are finally going to have options to look at, which is going to be spectacular. Then lastly, because we are going to start having less yes answers with demand, but the interest in real estate or single family homes is not going to fall. I believe the single family home is going to be the best asset for the next decade. Rents are going to go up. My history says prices go up first, rents follow. Rents will increase in single family homes, and they already are. I think they are going to continue. I think you can look for rents to rise for like the next 18 to 24 months in most markets pretty consistently. So again, the whole idea here, folks, is to learn your market, do the work, 10 to 20 minutes a day, get ready, understand what a average deal is so you can go do some good and great deals. And again, for the students of mine who did deals last week, congratulations. We all had a record score this week. It's going to be fun to create that video. Thank you very much. Enjoy your Sunday. Take care of yourself. Remember, good day to make some money, and let's be better than yesterday.